Hey traders, Jeff coming to you here on Sunday afternoon. I want to kind of give you a breakdown of what happened on Friday in the markets here. A lot of things happened in the market on Friday that's from a technical standpoint that could make a difference in how your trading works this week. So stay tuned. We'll get over there. All right, traders, real simple on Friday. We have been dealing with overhead supply for the last few weeks in here. I've been talking about for the room members about we've been in a potentially stage 3, as I mentioned earlier. And even though we did break higher, a lot of times you will break higher in the supply. It doesn't mean you've cleared supply because you closed above supply. You're still always subject to getting crossed back in. And of course, news doesn't help. The thing I want to point out too is that even on Thursday, we came down through the 8-period moving average, but closed up. The bulls had control of the market at the end of the day. On Friday, we came down through the 8, through the 20 and 21, and also down to the 15. If I redrew a trend line here, these were the dominant trend lines in here. And I redraw this trend line back up into here. Ultimately, look what happened here. From the crossover touch to the body, either one broke down through that and through most of the junk in the last 2 weeks. So that tells us that something is going on in the market here. Typically, we won't have a large bounce from this because this could set the stage. We should have had it on Friday. Also, we actually had the largest volume day of the year, negative volume with no bounce. So that could see a move down lower this week. I predict this week we may have a little uptick tomorrow morning as the Asian market kind of follows the US on Friday. But then we may end up kind of stabilizing sideways after a little move higher and then back down potentially. News could change all that, but this was definitely a very bearish mix. It's something that hasn't happened for some while. To cross through these moving averages and sit down here in the stage 3 market is very unusual here. Once we tested supply and got rid of it, came back down, then this happened. Things definitely got weird at this point. Take a look at this. All right, this is a picture of where we're trading right now in the futures market here. As we open here about 7 o'clock on Sunday evening here, East Coast time, you can see it's just kind of a web-based. You can get this basically through investing.com. You don't have to pay for it. It's free, but it'll show you where the market's opening. So right now, we're trading about 60.36. We were down here as low as, I don't know, right around 60.13. So we're up about $2 if you look at that from a SPY perspective. So we're a little bit of an inside bar. Now, to make a 3-bar play, you typically go inside, you range a little bit, and then you go down. So it'll be interesting to see what this week brings. So as a result, be careful not to get too ambitious about getting in early in the markets. This could go either way tomorrow. This could go either way all week. But the premise of what was set here on Friday, as I mentioned, through those moving averages, closing at the low, taking out 2 weeks of price trading range and the largest volume bar here, it tells us that we are still even more probable of being in a stage 3 type market. Let me show you something else that happened on Friday. This happens 2 times. This has happened 2% of the time in the last 20 years. As we marked off here when we opened in the market in here and we came down to standard deviation 1. This is based on a 1-day, not a weekly, not a monthly. Standard deviation 2, standard deviation 3 would have been about right there, 604321. And look at that, we closed below a standard 3 deviation Friday, could not bounce even above the lowest areas, which means that in the last 20 years, less than 2% of the time have we moved above 3 standard deviations in a 1-day price move. So that tells us that that's unusual. And with everything else I just mentioned here, this could be the catalyst that sets the stage for potentially lower prices. So we'll see how that looks on Monday. But again, you can see here breaking through all these moving averages, closing down at the low. This sets the stage for potentially lower price. Now, again, I'm not saying that we won't bounce up in here. That doesn't mean that we're bullish again. You will have that overreaction, like they went in a little too deep on this, some short covering, a lot of things that will bring the market back up. But I would probably think that somewhere around 603, 604, that would be a good place if we were going to go lower to not really break through. So we could have a $2 to $4 price move up tomorrow at the highest point. I don't suspect we'll come back up here 50%, but anything's possible. But somewhere in this neighborhood in here, that would reflect that the continuation is still mounting for later in the week, possibly newer lower prices. We've got a lot to deal with here. We've got support here, pivot support, a lot of demand in here, and certainly we came back down through the 50-period moving average as well. So we'll stay tuned to see how this week works out. Be sure to hit the subscribe button. Join us. You'll get these market updates, just brief market updates where we are for that particular week, and also where we are in the state of some of our plays that we actually commit to. And we'll see how we got in or we got out, and then we'll see how the play actually materialized even beyond that scope of 30-50% gains in some of the option prices. So be sure to hit the subscribe button. Looking forward to see you in the room.